Hello dear students, so in this video we will see multiple choice questions for the topic books of prime entry or original entry, subject bookkeeping. So students, in the previous video I discussed already which are the various books of prime entry and which type of transactions come in the books of prime entry. So now it will be easy for you to check with this all multiple choice questions. So go through that video first, because in this video I will not give in detail explanation about all the subsidiary books of all the books of prime entry. So now number 1, purchase day book is kept to record. Purchase day book is kept to record. The answer is only credit purchase of goods, because cash purchase of goods we record in cash book. All purchase of non-current asset on credit we record in general journal or known as journal proper. All purchase means credit as well as cash is not recorded in purchase day book, because purchase day book is kept to record only credit purchase of goods. Second, goods sold on credit are first recorded in. So goods sold on credit are first recorded in sales day book. Sales day book, not in cash book, because it is for cash transaction, not in journal proper. And sales return day book is for the sales return, the goods which are returned by customers. So when goods are sold on credit, they are recorded in sales day book. Third one, credit sale of non-current asset is recorded in. Credit sale of non-current asset is recorded in. Answer is journal proper. Journal proper. We saw in the last video which type of transactions come in journal proper. So of the one is credit sale of non-current asset, it is recorded in general proper. See, in the sales day book we record only credit sale of goods, only goods, not non-current asset like furniture, machinery, land and building. If there is a sale of non-current asset on credit, it is recorded in journal proper. Even the credit purchase of non-current asset is recorded in journal proper. In the purchase day book, we record credit purchase of goods. In the cash book, there are cash transactions, no credit transaction. So here answer is journal proper. Fourth one, goods returned by customers. See, we are selling goods to customers, and if because of any reason, if the customers are returning to goods to us, where they will be recorded first. So goods returned by customers are first recorded in, the name on this is here answer, sales return day book. See, when we are selling goods on credit, we record in sales day book. When we purchase goods and we are returning, we record in purchase return. Cash transaction we are recording in cash book. So when the goods are returned by customers, it is sales return, it is recorded in sales return day book. Fifth one, opening and closing entries are recorded in. So opening and closing entries are recorded in journal proper, recorded in journal proper. Sixth one, the total of the sales journal. See, at the end, after this one specific period, all the total by purchase day book or sales day book, it is entered in, it is transferred to some account. So the total of the sales journal is entered. The total of the sales journal, it is entered in the credit side. It is entered on the credit side of the sales account in the general ledger. So after a specific period, total is made of the sales day book or sales journal, and that total is transferred to the credit side of the sales account. See, and the total of the purchase journal is transferred to the debit side of the purchase account. So your answer is credit side of the sales account in the general ledger. The other options are debit side of sales day book, it is wrong. Sales day book has no debit or credit side, it is just a subsidiary book. The credit side of sales day book, no, it is also wrong. Debit side of sales account? No. The sales total is transferred to the credit side of the sales account. Seventh one, a trade discount. A trade discount is best described as. A trade discount is best described as. See, discount are of two types. Trade discount and cash discount. So trade discount is a discount given to a customer who buys in a large bulk quantity. Okay, see, assuming a customer buy many things from the business, he or she may be given an allowance or bonus. So it is called as a trade discount. And the cash discount means an allowance given to a customer who pays promptly or within a given period of time. So it is known as cash discount. So trade discount is the answer over here is D, a discount given to traders. A discount given to traders. See, here other options are not matching. We are taking the best option. So discount given for cash payment is known as cash discount. Discount given to suppliers. Of course not suppliers. We are giving to discount to the one who are buying from us. They are not our suppliers. But the traders who buys in a bulk to sell again to other one. So they are buying in bulk. They are selling to the other customers. So they get a trade discount. 8.1. The sales journal does not contain. So here answer is very easy, that is cash sale, because cash sale we record in cash book. In the sales journal we are not recording cash sales. Sales journal means sales day book. We are not recording cash sales. So answer is cash sale. 9th one, the purchase journal consists of. So here answer is a list of purchase invoice. See, we saw purchase day book. The format of purchase day book, date, particulars, then there is one column invoice. Okay, it is a source document from where the entries are recorded in the purchase day book. So all the purchase invoices, there is a list of the suppliers from whom we are buying. So it is recorded in the purchase journal. So purchase journal consists of a list of purchase invoice. The total of the purchase journal or a purchase day book is transferred to. So just like we saw, the total of the sales journal is transferred to the credit side of sales account. So the total of the purchase journal, it is transferred to debit side of the purchase account. The total of the purchase journal is transferred to the debit side of the purchase account. 11th, the balance in the purchase ledger. The balance in the purchase ledger are usually. See student, we saw credit purchase of goods are posted one by one to the credit side of each supplier's account in the purchase ledger. We are writing in the supplier's account, like suppose we are buying on credit from David. So in the debit account and the credit side we are writing purchases and the amount and date in the specific column. So we are writing in the credit side of the each supplier's account in the purchase ledger. So here the balance in the purchase ledger, are usually credit balances, because when we are recording in the credit side, at the end when we close that account, balance will be transferred to the credit side. So balance in the purchase ledger are usually credit balances. 12th one, debit notes are entered in our. So the answer is return outward journal. See, return outward means the other name is purchase return. Purchase return. In that, the source document is debit note. Debit notes are entered in the return outward day book. See, when returning goods, the buyer sends a debit note to the seller. The buyer sends a debit note to the seller. It shows the quantity of goods returned, cost and reason for the return of those goods. And the buyer makes out 2 copies of debit note. 1 copy is retained and the other copy is sent to the supplier along with the goods. And by using the copy retained, the buyer records these transactions in his return outward day book. See, when we are buying, when the business is buying goods, purchasing, and when it is returning goods, so that buyer is recording transactions in the purchase return or return outward book. So at that time, this all entries are from the debit note. So debit notes are entered in return outward journal, and the opposite of it is credit note. Credit notes are entered in the return inward journal. 13th, here see when example is given, like originally we bought 80 items at 60 each. We bought means when we purchase goods, we enter it in a purchase day book. Now when we are returning goods, suppose there is a trade discount when we are buying goods, like here given less trade discount of 25%. So now when we return 5 items, so we issue a debit note amounting to, so here you can do calculations, like 5 items are returned into amount of each item is 60 each. 60 each, it might be $60, shilling or rupees, whatever. So you have to remember amount is 60, so 60 into 5 is 300 amount. And the discount was, when we purchase goods, discount at that time was 25%. So now at the time of returning also we have to deduct discount. So 300 less 25% of 300, that is 75. So the 300 minus 75, goods are 225. So we now return 5 items, so we will issue a debit note amounting to 225. 14th one, of the following which should not be entered in the journal. Listen question, read question properly. Which should not be entered in journal. So what does not come here in the journal? So the first one is given cash payment for wages. Yes, cash payment we enter in the cash book. So it does not come in the journal. Then bad debts written off, it comes in the journal. Credit purchase of goods given. So it does not come. It should not be entered in the journal, because credit purchase of goods we write in the purchase day book. So it also not enter in the journal. And the fourth one is given sale of fixed asset, that is non-current asset, on credit. So it enters in journal. So which is not coming in the journal? Cash payment for wages and credit purchase of goods. So first and third one. So here the answer is B. First and third is given there. Now 15th one, the journal is. So the journal is a form of diary. Journal is a form of diary which records day-to-day transactions. 16th one, which of the following is not a book of original entry? So purchase journal is a book of original entry. Sales journal is a book of original entry. Sales return is a book of original entry. So which is not a book of original entry? Sales ledger. Because from the sales journal, in the sales journal first transactions are recorded, and from there it is transferred to sales ledger. So it is not a books of prime entry or books of original entry. So answer is sales ledger. 17th, the document issued whenever goods are bought or sold on credit is known as, so answer is an invoice. Invoice is issued when the goods are bought or sold on credit. When goods are bought or sold on credit, it is purchase invoice for purchase day book, sales invoice for sales day book. 18th one, which one of the following is book of original entry records the supplier's account? Records the supplier's account. So the answer is purchase day book from the supplier from whom we are buying. So first we record in the purchase day book, not even purchase return. So here answer is purchase day book. 19th, the document sent by the supplier, to check the overcharge on the original invoice, is called as credit note, See, debit note and credit note. So credit note is a document sent to a customer showing the amount credited in his or her account in respect of goods returned by him or her. So when the customer returned goods to us, so business is sending them a credit note, and also it is a document sent by the sellers to the buyer if they are overcharged in the original invoice. If the amount is returned on the invoice while selling goods to them is more than the actual amount, if they are overcharged, so to correct that overcharge, to check the overcharge in the original invoice, credit note is sent by the seller to the buyer. So the answer over here is credit note. 20th one, dash is one of the books of original entry in which goods returned to suppliers are recorded before posting to the ledger. See, supplier means from whom you are buying or purchasing goods. So when the goods return to suppliers, when goods are returned to supplier, they are first recorded in purchase return journal before entering into ledger. 21. Which of the following book of prime entry records the name of the buyer or debtor's account? So first, when we sell goods on credit, so the name of the buyer first we record in which books? Sales journal. So answer is B, sales journal. Now the second last, dash is an allowance given to a customer who settles his bill within a given period of time, that is promptly. So we already discussed about this, about trade discount and cash discount. So answer is cash discount. It is given to facilitate a quick or a prompt payment. So a cash discount is an allowance to a customer for giving promptly payment or giving quick payment. So it is known as cash discount. And trade discount, it is a deduction in the price given to a trade customers when they purchase goods. It is usually allowed to customers who buy large quantity of goods. So here the answer is cash discount. So whenever customer is giving promptly to facilitate that quick or prompt payment, the discount is given to them, which is known as cash discount. Now the last one, which of the following book is used to record goods returned to us? So when we are selling goods, we are entering in the sales journal. So when goods return to us from the customers, they are recorded in a sales return journal. Okay, thank you students. So students, like the video if you like it, and do comment in the video that for which topic you want me to make more and more video, and also share it with your friends so they will also use this video. Thank you very much. Have a good day.